So only US was not the only jurisdiction that was affected by the rate hike. US has a long-standing impact on the global economy. Here is Alina to explain to us how not just across US but also in an international market there was a huge influence due to the banking crisis. We have Alina with the impact on emerging economies such as Switzerland. So I welcome Alina, the back office manager and dealing desk manager, to explain to us how the European banks have been affected by this crisis.
So we've heard a lot from my colleagues regarding how this banking crisis and the financial distress are not just limited to the US, and it has sent ripples across the world, and even the mighty Europe shook in its turmoil. So I want to talk about how it all started in the Europe with respect to Credit Suisse. So let's understand basically how Credit Suisse fell from grace. So Credit Suisse was one of the biggest banks in the world, and it's the second largest Swiss bank. And ever since its peak in 16 years, since 2007, it lost almost 99% depreciated in its share price. So, was it really caused by the US bank collapse? Not really, because it had 1.3 trillion Swiss franc as deposits in 2005. And when we reached 2022, it shrank to nearly 531 billion Swiss francs. So we can say that there was some underlying issues going on, and this issue traced back even before the Russia-Ukraine war or the US bank crisis, or even before the COVID pandemic. So to understand that, I want you to walk along with me and understand what this bank went through. So primarily, there were four departments for the bank. The main revenue source for the department was the wealth management, which generated around 37% of their revenue, followed by regular retail banking services like taking deposits and lending out money to the borrowers. That accounted to around 32%. And there were other two departments also, like investment banking division and asset management division. So combined together, all these divisions were performing really well, and they were giving a lot of profits to the bank. At the same time, on the other side, there were massive expenditures also, specifically on litigation expenses like the court fees, the arbitration fees, the witness fees, or even on the case filings and attorney fees, all that. Why? Because the bank was involved in a lot of scandals. Just to begin with, there are so many cases that comes to my mind, like the Bulgaria one that allowed the drug dealers to launder money. Then there was one where the bank faced a very offensive criminal charge over helping the Americans to evade the tax. And in 2017, there was a bigger case, a settlement with the US authorities, as it claimed to have misled the investors in residential mortgage backed securities that also ran up to the 2008 financial crisis. And it was also caught up in another spying scandal. So that, like, there were so many cases going on, and that also forced the CEO to step down in 2020. And after that, despite all these scandals, and the bank was able to survive because the customers, the investors, still believed in the bank and they were depositing in the bank. However, the things changed when it faced with another catastrophic disaster, and that was two high-profile cases. That was the Greensill Capital and the Archegos Capital Management. So both had heavy backing from Credit Suisse, and both collapsed in 2021. And that's when people started losing their trust. They started withdrawing their money from their accounts, and Credit Suisse slowly started collapsing. But still, that was not the end of it. Everyone thought that was the worst thing to come when this US bank crisis happened. So almost $100 billion were pulled out in 2022 quarter four itself. So like we previously knew, the wealth management division of the bank was the major revenue source, and it shrank by 27% within 1 year, from 2021 Q4 to 2022 Q4. So you can imagine the massive impact of that. And when this US bank crisis happened, Credit Suisse lost almost 74% of its share price just in 8 days. Imagine how massive that is. So, under the already wobbling pressure of all these things that I've already mentioned, the bank also saw that there was a high level of the credit default swaps of the bank, it skyrocketed. It was at the highest peak in 2 decades. That means whenever the credit default swap prices goes up above 1,000 basis point, it means it's at a high risk category. So for Credit Suisse, the CDS price was at 3,460 basis points. So you can imagine the magnitude. So that's what I want to also talk about, how bad this collapse, the impact was. So for as far as Credit Suisse is concerned, it was the national identity of Swiss nationality. So basically, when you think about Swiss banks, all that you can think is the trust, which is built on two factors. One is secrecy, another one is neutrality. So there were so many people across the world who really trusted in Swiss banks and they deposited, and that trust was broken. So it was a major setback on the Swiss economy. And secondly, this bank was one out of the 30 global systematic banks. So that was also a major impact. So globally, also it was shook, and then that's why they all the authorities and the global authorities, especially, wanted to make sure that the bank does not fall into liquidation. So they came up with a lot of remedies. So immediately, the Swiss National Bank, okay, 50 billion Swiss francs to shore up its liquidity. And but that was not enough, because the Saudi National Bank, which is the largest backer or the investor for Credit Suisse, they mentioned that they won't invest any longer. So that crushed the investors' confidence, and Credit Suisse tanked 24% again. So neither of these was a permanent solution in this case. So that's when they resorted to the uh, final option, that was a shotgun wedding between Credit Suisse and UBS Group, which is its rival, the largest bank in Switzerland. So there were so many controversies around this remedy. So was it really good or bad? We are yet to find out. So the deal was not subjected to a shareholders' vote, or even the competition commission had no say in it. And the UBS also seemed to have taken quite an advantage during this takeover, because the Credit Suisse price fell around 99% depreciated when this takeover happened from its peak level in 2007. And this deal was also not really approved by the investors. Why? Because it was a very unusual but fully legal move from the supervisory authority group of Switzerland, that's FINMA, and they tried to completely wipe out or write down 17.3 billion worth Credit Suisse's 81 bonds, that is additional tier 1 bonds. So that was quite unexpected. So that means the bondholders lost all the faith in their investments. They would lose all their money, and this has spooked the markets and sparked a sell-off in the bank debt. So from the strategy of marrying two big banks together to save it from a very difficult situation, what can we expect? So I can think it as a both optimistic and negative impacts can be there. Let me start off with the optimistic one. So this is like an exceptional emergency takeover case, and it was like the best rescue measure available at that moment in order to calm the distress in the market and prevent Credit Suisse from getting liquidated. So in that sense, it was a good move. And we also expect that UPS is already a top player, and it will get more. It will become bigger. It will strengthen its position as a global leader, as a wealth manager, as an asset manager. So it's good for UBS in another way. And also, the combination of two businesses is expected to generate annual run rate of cost reductions of more than 8 billion by 2027. So these are some good aspects, but it's not free from negative outcomes as well. So a substantial part of Credit Suisse assets is either impaired or perceived to be impaired. So that shows unstable health in the banking sector. And you all know about the global rating agency S&P. They have changed the outlook of UBS from stable to negative post this takeover, mostly because it could mean weakening of the combined bank group's competitive position, or underperformance against its financial targets, or basically in terms of sizable restructuring or litigation cost involved, all that. And also, many expect that there could be a negative economic impact after this takeover. So to give an idea, in 2021, financial services sector contributed about 40 billion Swiss francs to the Swiss GDP, and that's about 50% was attributed by Credit Suisse and UBS alone. So there is a study that proves that Credit Suisse collapse would amount to a loss of 0.05% of GDP per year. And another thing is UBS intends to downsize Credit Suisse investment banking business in order to align it with their current credit conservative risk culture. So that could also mean there could be job cuts in the market and unemployment rates could arise. So to conclude, what is the outlook of European banking sector? So along with Credit Suisse, there was another name that came up in the news, and that was Deutsche Bank. So, as you can see, it has recorded highest profits in the recent years, last year. But before that, it also had a very long negative history. It had troubles with the regulators, including 7.2 billion US dollar penalty from the US authorities for misleading buyers of complex mortgage-backed securities, and there are so many other scandals or issues involved. There was once upon a time, there was a time when IMF also called this bank as a riskiest bank, but this bank launched a lot of other restructuring plans and managed to restore its financial health. So fundamentally, it is much healthier than Credit Suisse. It's well capitalized, but the share price fell maybe due to the ghosts of the past or the investor panic or the general sentiment that happened after the US bank collapse. So we can say that these banks passed the banking crisis test, and but we can be cautiously optimistic because Germany is has already slipped into recession. It has officially announced that, and the recent events have actually shaken the confidence of investors. But we do not really expect another 2008 situation to crop up. So. Overall, I could say that more banks are subject to regulatory stress in Europe than in US, and European banks have actively been hedging their interest risk, which SVB did not. And however, it's the future as it's not that rosy as you think, because it's slightly worsening economic situation is what really concerns the European banking sector. So while the inflation is proving to be really sticky than expected, the bond yield curves have started to slope downwards, and that's also reflecting expectations of recession across Europe. So, and also other points have already been discussed by my colleagues in the earlier discussions. So there are lots of risk of consumers defaulting and the companies also not paying back and landing in financial trouble. So to end my note, 2023 crisis has exposed unresolved banking vulnerabilities. And what more can we expect in the wake of recession? So are we walking on eggshells? So are our banks too big to be saved? I would like to listen to your points as well. Thank you.